Hey guys, welcome back to the channel. Today I'm going to be providing a logarithmic regression curve analysis for Ethereum. So I'll be talking about this logarithmic function, how it's calculated, why it's useful, and my overall takeaways. So if you guys enjoy the content, make sure to leave a like and subscribe. So first I'm going to start off by talking about what this curve is and how it's calculated. So basically this curve is just a best fit line that is calculated by taking data points during the bear market or the accumulation phases. So I'm just going to circle those phases right here on the chart in yellow. And basically I've taken all these data points and I've plotted this curve right here, which is the blue line, to go through these as a best fit curve. And it's modeling the parent function of the logarithmic curve, which is characterized by a pretty high and aggressive slope towards the beginning, and then over time it does start to decay, where it really does resemble Ethereum and its volatility, where again over time we really had those crazy returns towards the beginning. We still do have pretty impressive returns, but they certainly are diminished considering Ethereum has increased in market cap, ever since these early days. And the goal with this logarithmic curve is just to extend out these accumulation phases so that we can help understand and predict out a future accumulation phase based on Ethereum's nature, which again is that diminishing volatility over time, which does closely resemble the logarithmic function. And to get a more appropriate zone as opposed to one specific price point, I've added a buffer on either end so that we can get, again, more of a zone and a range as opposed to one specific price point, which I think is important to consider. This indicator is not really trying to predict the exact bottom. It's just trying to show us what an ideal accumulation zone would look like as given the previous historical data. So currently this band ranges from around $650 all the way up to around $1,280. Again, the midpoint, the actual logarithmic curve, around $917 with the buffer on either end. Now, my general approach with this logarithmic curve is that if Ethereum is within this, I will be accumulating and I will be establishing a longer term position. Now, I'm going to be taking a DCA approach in that, which is basically just averaging your buys at different prices so that you're not all in or all out at one specific level. And that's what I really like about this, is that it does give you the opportunity to accumulate at various price points. For example, back when we first entered this logarithmic curve, I first started to accumulate Ethereum at the top of the band around 1200. And then as we got further and further in, I started to accumulate more and more, with my second longer term DCA buy around $1,000, which is the midpoint between the upper curve and the mid curve. So again, taking on that DCA approach where I'm not really trying to time a specific bottom, but just accumulating at prices that are right for me, prices that I think in 2 to 3 years will be looked back upon for Ethereum as great opportunities. And when I say great accumulation opportunities, I'm really specifically referring to the long term, where back again to that example where I started to accumulate Ethereum on the high of the logarithmic curve around 1200, that clearly did not work out in the short term. We've had the move down below 900 that had a negative short-term ROI. But my goal again is that I really just want to focus on a multi-year perspective where if we continue lower, I'm just going to continue to accumulate with buys around the midpoint, around $920, the 1 quarter way, which is $780, and then even to the lows if we make it that far, currently around $650. Now these are all moving targets. These are all moving up week over week because that's just the nature of this logarithmic curve. That's how it is calculated. That's how it's projecting out the data. So if we do have several more months before entering back down, consider that those targets would change. And just to visualize this, again, when we had that first move into the regression curve, that corresponded to $1,200 being the upper regression band, but currently today it's at around $1,290. So it is moving up, and it is definitely going to be increasing as we continue further on into the cycle. So if we have a move towards the end of the year, it's very possible that we have a retest of some of these lower valuations while still maintaining the current lows. So that's one thing to consider. And you can actually see a very similar thing played out in the previous market cycle where we did have our first initial low towards the lower regression band in December of 2018, around $82. But later on in March of 2020, we went even below the regression curve and had a low above that towards $90. So that's sort of what I'm talking about here. So the takeaway here is that even if we do have a longer term bottom in place from a price standpoint, we could still get the opportunity to accumulate towards the mid and lower regression curve later on if we were to theoretically have something similar playing out to the previous cycle. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out our sponsors in the link in the description below. We're partnered with FTX.us. It's a great cryptocurrency exchange, and if you sign up through my link or with my referral code SNOWYCRYPTO, you can get a 5% discount on exchange fees. As always, I hope you enjoyed, and I'll see you in the next one.